Welcome back, and joining us for a look at the day's markets action is Andrew Padoa from Sasfin Wealth. Thank you so much for your time, Andrew. As always, the market seems so fluid because one day, they're saying that we don't see interest rate cuts coming from the Fed anytime soon, to now with a single piece of data, with markets now coming back and starting to talk about interest rates again. What have you made of sentiment today, especially after the digestion of that U.S. labor data?
Well, firstly, thanks very much for having me, Zanati. So if we go back to Friday, great day in the markets in the US. Softer jobs data means the US economy may not be doing as well as everyone expected. Maybe the economy is going to get a little bit worse. To prevent it from getting worse, interest rates need to come down. And the markets cheered. So a great example of how bad news can actually be turned into good news for the markets. Good start to the JSE this week so far.
And it's always quite interesting because, I mean, as much as interest rate cuts are a big thing, but you can kind of get to a scenario where something actually breaks or something is close to breaking for central banks to start cutting interest rates. So that's going to be quite an interesting thing to watch. Let's take it back home and look at some of the company news that came out of the JSE. Not a particularly busy day. We did have Redefine coming out with its interim results. Everything looked okay. Revenue increased by 7%, distributable income up 6%. As I said, those numbers looked all right on the face of it, but that share price slumped over 3%. How did you define those numbers?
So if we look at revenue, decent revenue, but headline earnings were still down double digits. They've got a juicy dividend, but I think you've just got to be careful. There's quite a lot of debt there. I feel for these guys. If you look at their share price over the last 10 years, it's kind of a South African story. I think even on a total return basis, even including the dividend, you are still down. You still lost money over the last 10 years. So, yeah, it's tough. You got to watch out for that debt level. Maybe that's why the market didn't like it. I think interest rates are likely to stay a bit elevated. So debt levels really do matter for companies going forward. Market didn't like it.
It's quite interesting because, I mean, it is a diversified property company, and as much as they do have exposure to the South African economy, they also have exposure to Poland, which is a market that a lot of investors are optimistic on. But is it a case now of, even if there are all these green shoots and all this positive news coming out of the offshore market, just the broader macroeconomics that the company is operating under, markets just can't look past that?
Yeah, I think that's it. I think you nailed it.
Yeah, so it's going to be very, very interesting also to see how the property market performs, especially as we head to the second half of the year, where there are interest rate cuts expected on that front. Well, let's take a look at other news that came out of the JSE. Redefine making an announcement today that it is successfully producing liquid helium. We did see some optimism coming through there with the share price climbing over 7%. Could this be a sign of some level of confidence coming through for the company after many delays?
Yeah, I think the reason for the sends is to try and create a bit of confidence. Basically, the news announcement was to say that they're producing helium at a plant. That was it. So that's my reading. Like you said, they're way behind in production targets. I was looking at their charts, and the share price, it's around about 12 Rand a share. They hit 43 Rand a share when Russia invaded Ukraine, and it's been downhill ever since. So they're down 70% since then. So up 6% today, but still a long, long way to go.
I mean, I guess you can't really blame them for making this announcement, even though it wasn't too hectic, because, as I said, there have been many delays and the share price has been under pressure, where it seemed like there was kind of a loss of confidence that we saw there being reflected in that chart. Let's go into another property company, Calgro M3, that released a further trading statement for the full year, saying that they expect headline earnings per share to grow by as much as 27.7%. Talk to me about Calgro, a small cap. I'm not sure how many analysts look at it, but I mean, just from the numbers that they keep churning out, it really looks like they understand that part of the market that they are in, and they're even trying to create value for shareholders when you look at the share buybacks.
Yeah, absolutely. So Great to see a South African company, doing well. It's tough out there, so great to see expected earnings growth of, north of 20%. Like you said, doing some buybacks. So even with a bit of share price momentum we've seen the last couple of months, management clearly believe the shares are still relatively cheap. Yeah, look, it's quite interesting. They're doing well in their memorial sites. You've got to
Yeah.
take your hats off to these guys with being innovative and entrepreneurial. But basically, they have plots of land and they convert them into cemetery sites. And according to them, it's their highest cash collection since the formation of this division in 2017. So
Wow.
pretty innovative. Good for them. Well done.
Yeah, and it really just speaks to how they've strategically positioned this, because I do know that they were under pressure a little bit after COVID. So it's quite
Yeah.
fascinating
Yeah.
to see the growth that we have seen there. Of course, we know some of the things that they did where now you can actually lay by a plot there. Interesting times that we're living in, Andrew.
Yeah.
Let's get to your stock pick for today.
Sure. So my stock pick for today is a new one that we've added at Sasfin, and that's Striker. Striker is arguably the best diversified medical technology company in the world, with one of the best management teams. They do pretty much everything in the surgery space. So if someone is in a car accident and a private ambulance comes to fetch them, the bed in the ambulance is probably Striker. Then you get put on a hospital bed in the hospital, probably Striker. You go to the ER, the drill is a Striker, this is Striker, that's Striker. Striker is everywhere in the hospitals. They've also got the Mako robot, which is the leading robot for hard tissue surgeries. So when I say hard tissue, I'm talking about bone. So if you know someone who's had a hip or a knee replacement and a robot was used as part of the surgery, it's very likely it was Mako's robot. The baby boomers are retiring and they want to play golf, they want to cycle, they want to play paddle or padel. I'm
Yeah.
not sure how you say it.
Paddle.
Yeah, that's it. But bottom line is plenty of people are going to need hips and knee replacements over the coming decades. So Stryker, yeah, amazing business. Got a secular tailwind with the baby boomers retiring. Great business.
All right. Well, thank you so much for your time and for your insights on what has been moving investors' money today, Andrew. That was Andrew Padoa from Sasfin Wealth.